Okay, so we'll jump into it. So good afternoon and welcome everyone. My name is Michelle Bouchard, and I'm one of the accounting and assurance partners here at Hendry Warren. Today's presentation will focus on private foundations and some of the corresponding requirements that you need to keep in mind. A family foundation can be a really powerful philanthropic tool that allows families to leave a legacy and make a meaningful impact in their community. However, setting up a foundation and knowing all of the reporting requirements can be a really daunting task for families. Specifically in my line of work, I often get the question, I've set up my foundation, now what? So before we get into today's presentation, just a quick disclaimer that, of course, everybody's situation is unique, your foundation is unique, and your sources of revenue, which we'll talk about later, is unique. So we'll talk about some of the thresholds today to keep in mind, but of course, everyone should discuss your specific situation with your lawyer and accountant and go over the criteria that's applicable to you because it'll be different for everybody. So on the agenda today, we'll talk about the various types of foundations and talk about which ones we'll focus on. We'll talk about what an audit entails and when it's a requirement for a foundation. And then beyond the legal accounting requirements for an audit, we'll talk about some situations where an audit could be beneficial anyways, some alternatives to audits, and then how to prepare yourself for an audit if you do fall into that category or you choose to fall into that category. So types of foundation. So before we jump into the thresholds for an audit requirement, I want to just touch on some of the specific types of foundations and then talk about which one we'll specifically cover today. So per the Canada Revenue Agency, there are three types of registered charities. So one being a charitable organization. So think the Ottawa Humane Society. Second being a public foundation. Think the CHEO Foundation. And then the third being a private foundation. So today's presentation will focus on that third option, so the private foundation. And the reason why we're focusing on that type today is that there are some specific additional considerations you need to keep in mind when trying to determine where these types of organizations fall in that audit threshold decision tree. So for a private foundation, what makes it unique in terms of its structure is that more than 50% of its funding comes from a person or group of persons that control the charity or make up the board of directors, officers, and whatnot. As well, with this type of foundation, it is also typically funded at more than 50% from those non-arm's length parties. So people related, a person or a group of persons that's related to the charity, either through the board or management or officers. So before we talk about when an audit would be required, we'll talk briefly about what an audit entails. So the objective of an audit is to provide the highest level of assurance that the financial statements are free from material misstatement. It includes an extensive examination of the financial statements, the underlying accounting records, and usually includes tests of accounting records, confirmations with third parties, observation of processes, and looking at the internal controls for the organization. It could include physical inspections if that's applicable to that organization, and would of course include inquiries with management. This type of engagement is the highest level of assurance, and the ending report for this would be your set of financial statements, which would comply with whatever financial reporting framework you were using. And then, of course, it would include the auditor's report. The goal of a financial audit is to provide an opinion as to whether the financial statements present a true and fair view of the organization's or foundation's financial position and performance. And this is helpful for stakeholders. So think of donors, members of the community, the board, and allows them to make informed decisions about that organization. So of course, there's an audit with that highest level of assurance, but there are also some alternatives to an audit. And we'll talk about when audits versus these two types of engagements would be applicable. But just to talk about some of the differences, the two other types of engagements are a review engagement and a compilation engagement. So if you think of an audit being the highest level of assurance, a review is a moderate level of assurance, and it includes examination, but limited compared to an audit. It would include analytical review procedures, inquiries with management, and some limited verification of the data as well. This is classified as a moderate level of assurance. And similar to an audit, it would have your financial statements, but instead of an auditor's report, it would have a review engagement report saying that nothing has come to our attention that makes us believe that the statements are misstated. The lowest level of assurance would be a compilation engagement. And so with this type of engagement, it's prepared to assist management or the organization in presenting the financial information as a set of financial statements, but it uses the underlying records and financials as provided by the organization to us being the public accountant. So unlike the other two engagements, this one does not provide any level of assurance, and it's really prepared based on information provided by the organization to the accountant. So in summary, audit, high assurance, extensive procedures. It would give an opinion on the accuracy of the statements, a review, moderate assurance, and limited procedures, and then a compilation, no assurance, using the data provided by the organization to us, and then no opinion on the accuracy. So these services differ primarily in the level of assurance they provide, the extent of procedures done, and then, of course, as a result, the associated costs of each of these engagements. So given that audit is the most extensive and rigorous of the three, it's, of course, the more expensive engagement, and then reviews being second most expensive, and then compilations being the least costly. So now that we know what those three types of engagements are, we can talk about when each of them would be needed for your private foundation. So believe it or not, whether a foundation needs an audit or not is actually more of a legal requirement than it is an accounting requirement. And the legal acts that dictate which types of engagements are needed are if they're incorporated federally, would be the Canada Not-for-Profit Corporations Act. And then if they're incorporated provincially, just focusing on Ontario today, we would look at the Ontario Not-for-Profit Corporations Act. And so to go back to that disclaimer as well, because we're only focusing in Ontario today, again, if you're in a province outside of Ontario and incorporated there, all the more reason to chat with your lawyer and accountant about your specific situation. So using the Ontario Not-for-Profit Corporations Act, that act puts corporations into two different categories, the not-for-profit corporations. So one being a public benefit corporation and the other being a non-public benefit corporation. A corporation is considered to be a public benefit corporation when it is either a charitable organization or when it has received more than $10,000 in revenue from public sources. So what it defines as public sources includes gifts or donations from people who are not members, directors, or officers, or employees, and would also include grants from all levels of government or from another corporation that receives that public source of revenue as well. On the other hand, a non-public benefit corporation is a corporation that receives no public funds as defined previously, or receives less than 10,000 of those public funds in the previous 3 fiscal years. For the Canada Not-for-Profit Corporations Act, similar in what it defines as a public benefit versus non-public benefit, but instead the terminology for this act is soliciting versus non-soliciting, but just keeping in mind that how it defines soliciting versus non-soliciting is very similar to how the Ontario Not-for-Profit Corporations Act defines it. So in both cases for federal and Ontario, the most recent rules that we use now came into place in 2011. And I'll just go through the thresholds because even though the definitions of what's public benefit, non-public benefit are similar, the thresholds that they use for which type of engagement you need are different depending on where you're incorporated. So if we start with a federal incorporation and the federal requirements, so using that soliciting, non-soliciting terminology, if you are a soliciting not-for-profit, meaning you receive more, you're either a charitable organization or you receive more than 10,000 in public source revenue. If you have 50,000 or less of gross revenue, so including the public source, but also including your other revenue sources, if you have less than 50,000, there is some flexibility with which type of engagement you need. So audit always being the default, of course, but the board can make a unanimous resolution to say that they either want to do a review engagement or they can choose to not have a public accountant and go with a compilation engagement. So there are some options if you fall under this category. If you're soliciting, but in that 50,000 to 250,000 of gross revenue range, still some options, but less. So again, audit being the default, but the board can unanimously agree to instead do a review engagement. So that's an option. However, if you are soliciting not-for-profit and you are over 250,000 gross revenue, the only option is an audit, a set of audited financial statements. So you would fall under that category. So non-soliciting, so this is a situation where a not-for-profit doesn't have any public source of revenue or less than 10,000. If you have under $1 million of gross revenue, then you have those similar options where the board can choose and would have to unanimously agree to do a lesser engagement, so either a compilation or a review engagement. But if you're even if you're non-soliciting, once you're over that $1 million of gross revenue, then you would fall under the requirement to have an audit. So even though you're non-soliciting, due to the level of revenue that you have, you are required to have an audit. So quickly looking at the provincial requirements, again, using the public benefit versus non-public benefit terminology. If you're a public benefit corporation, their lowest threshold is the 100,000. And so for 100,000 or less of gross revenue, including all sources, you would have flexibility. Again, would need to be decided and agreed upon by the board, but you could do compilation, review, or an audit, whatever the board deems to be more appropriate and prudent for that organization. If you are in the 100,000 to 500,000 range for a public benefit, then you can either choose to do a review engagement or an audit. Again, audit being the default, but the board can make a motion to have a review engagement be done instead if they deem that to be more appropriate. And then if you're more than 500,000 as a public benefit corporation, no options, you are required to do an audit. And then on the other hand, so non-public benefit, so their threshold is 500,000. So even if you are a organization that has no public fund sources, if you have 500,000 or less, you get those options: compilation, review, audit. But if you're over that 500,000 threshold, then you are required to have an audit done regardless, even if you don't have those public sources of revenue. So where there are some additional considerations for private foundations is really that definition of public benefit corporation and looking at what the sources of revenue are for that private foundation. So as you can imagine, with a private foundation, they're usually started by a family. The directors and officers are usually made up by family members or those dealing with them non-arm's length. So when we look at what the definition of a public source of revenue is, it's that 10,000 threshold from sources from people who are not members, directors, or employees. And so what you need to keep in mind is if your foundation has no public sources of revenue outside of those who are related or members or directors of the organization, then you may fall under that non-public benefit corporation. And in that case, you would not automatically need an audit, again, as long as you were under the 500,000 gross revenue threshold if you're in Ontario, or the $1 million threshold if you're incorporated federally. So that's the big thing to keep in mind, is what's your source of revenue for this private foundation, because that's going to drive whether you fall under the public benefit, non-public benefit, or soliciting, non-soliciting. That's what really will drive your decision. So these are the thresholds that are the requirements for the audit, but beyond the actual legal requirements for an audit, there are situations where, you fall into the categories of, I only actually need a compilation or review if the board unanimously decides. But there are situations where the board would say, we're not legally required to have an audit, but it may be beneficial to do so. So where I see there being benefit to having an audit, even though it's not necessarily legally required for those acts, is that it gives some enhanced credibility and trust because you are doing that deeper dive. You're doing extensive and rigorous examination of the financial records. You're looking at the internal controls, and the auditor is looking at risk management and what tools are in place and what is being done on a governance and management level to manage the risk. And as part of the audit, if there are any sort of internal control issues, those would be communicated to the board. And so there's a lot of useful tips that usually come out of an audit and can give the board a lot of reassurance about what's happening in that organization and making sure that there's the financial accuracy and transparency. Another benefit is because that threshold for the public source of revenue is pretty small in the grand scheme of things, that 10,000 threshold. If you have an audit from the get-go, then you don't have to be concerned, are we getting close to that 10,000 of public source? If we receive a public source donations, maybe somebody from outside the family or the public, you don't have to worry about, oh, now we need to get an audit, or really being cognizant of it. You already be and that default audit engagement. And so you already be prepared to receive some of those public source revenue items if those situations pop up. So if you do decide to go through with having an audit completed, there are some ways that you can make your life a little bit easier to get yourself prepared. And a lot of these have to do with familiarizing yourself with the audit process and what the auditors are going to be looking at. So because they're doing an extensive review of all of your records and your processes, these are some of the tips that we would provide and that you should have in place before an audit. So I have it listed as the last thing on here, but really the first thing is what I would recommend is having a discussion with your auditor and asking for, a document wish list. So what types of items are they going to need during the audit process? Are there any forms that you can fill out ahead of time? And so that throughout the year, roughly what, won't be a be all end all list, but roughly what the auditors will need to do their engagement. So you can, once those documents are ready, pull them together, have them all set aside in one place or easily accessible. You'll also want to make sure throughout the year that you're keeping up with your accounting. And so typically what I would see with a private foundation is, you'd have like reconciling your bank statements, there would be investments within the foundation. And so making sure that you're keeping up with not only the bookkeeping, but making sure you're reconciling those underlying financial records to those source documents. So those bank statements, those investment statements, and keeping up with that so you don't fall behind. And that when it comes to audit time, maybe you have 1 month to do once you're past your year end and you're not catching up on a whole year, which can be a big undertaking. And so these are our main tips, but really for preparing for an audit, again, chatting with your accountant and having those discussions early on will just make your life a lot easier when you get to that point. And so at Henry Warren, we of course provide these services. And so we can not only assist with an audit, but also in that initial disclaimer where I noted you should have those initial discussions with your accountant and lawyer to see where your foundation falls in that decision tree. So I believe our information is shared at the end of this presentation, but also on our website would have our contact details as well. So please don't hesitate to reach out to see where you fall with your unique criteria or your unique situation. And so on that note, I'll open it up for questions. And so if anybody has any questions, please feel free to pop them into the Zoom chat, and then we can answer any questions that anybody has. Just make sure I can see it here. And so I don't see any questions yet. Sorry, I'll switch to this next one. And so maybe while we're just waiting to see if anyone has any questions, just a reminder, we host monthly webinars and on a range of topics. And so we'll have something next month around a similar time. And so make sure to follow us on LinkedIn because that's where we'll post about upcoming webinars, and then make sure to subscribe to our YouTube channel so you can see all of our previous webinars as well. So it doesn't look like there's any questions, so I'll wrap it up here. But thank you to all of you who attended. And if you didn't ask your question today and you have something to ask, please feel free to email me. Okay, thanks everyone. Have a great day.